Hello, everybody. Welcome to my Wiley solution walkthrough. This is take two, accounting tools for business decision for this problem. Accounting tools for business decision making, 8th edition problem 23-1. This is standard costing. The textbook authors are Paul Kimmel, Jerry Weingat, and Jill Mitchell. The question used in the presentation is copyright 2022 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of myself and not the authors of the textbook or of Wiley. So before we thank that bus driver, let's go ahead and look at our question. So over here, we've got Rogan Corporation manufactures a single product. So it's going to give us all the standard costs over here, materials, labor, and everything else. Then it's also going to tell us about the predetermined manufacturing overhead rate is $10 per direct labor hour. And then it gives us this information here. So it's asking us to go through and to compute the materials and labor variances as well as the total overhead variance. So how do we go about and do it? Let's take a look first at materials. When we're looking at materials, right, what we're going to try to go through and do is we're trying to go through and say, okay, what did we actually spend on our materials? Okay, this is for materials, direct materials. And I'm going to compare this to what I should have spent, my standard quantity times the standard price. So my total direct materials variance is going to be my actual quantity times the actual price minus the standard quantity times the standard price. So over here, I used 5,100 pounds to get 36,720. Okay, so I used 5,100 pounds at a cost of 36,720. That means my price per pound would have been 36,720 divided by 5,100, or $7.20. You can also say, well, 5,100 times X equals 36,720, right? X is going to be 36. I have to isolate X. I divided both sides by 5,100, and that's how I'm coming up with the value. Just make sure you go through and check it just to make sure that it works. Over here, my standard quantity. Okay, so I produced 4,800 units. So how many pounds of material should I have used? Well, it's 1 pound of plastic, it's 7 per pound. So it's going to be 4,800 units times 1 pound per unit. I'm going to then multiply this by my standard price per pound of $7. And over here, I'm going to get 33,600. So my total variance, right? I spent more than I should have. Okay, and let's look at this. On a per pound basis, I was 20 cents higher. On a materials basis, I was 300 pounds higher. So throughout this, as we're looking at all of our variances, right? And when we have a variance, we're going to say U is going to be unfavorable. F is going to be favorable. Okay. So when I look at this here, 36,720 less 33,600, this is going to be unfavorable. Total direct materials variance. Okay. Now what I need to do is I need to isolate, well, what are the components of my materials variances? If you want more of an in-depth, go ahead and take a look at some of the earlier exercises I did, and you'll see me go through that in excruciating detail like all of my other videos. Right over here, actual quantity times the standard price. Actual quantity is 5,100, standard price is 7. So my number here is 35,700. Okay, so that's my total direct materials variance. So now what I'm going to go through and do is I'm going to say, okay, well, what about the other components of it? Well, my direct materials rate variance is going to be my actual quantity times the actual price minus the middle value, or actual quantity times standard price. When I'm comparing this to this, the actual quantity is staying constant, so I'm able to isolate the price. So over here, this is going to be an unfavorable direct materials price variance. And then over here, my direct materials, got its direct materials price variance, not rate. So this would be my direct materials, quantity. My direct materials quantity variance is going to be the middle value, or AQ times SP minus SQ times SP. Again, I'm leaving the standard price constant, so I'm focusing on how much I used. So this is going to be 35.7 minus 33.6. Don't worry about the positive or the negative. It's more important if you know if it's going to be favorable or unfavorable, at least in my class. So over here, right over here, you've got about a difference of 2,100. Doesn't make sense. Well, I used more pounds than I should have. So yeah, this is going to be an unfavorable direct materials quantity variance. That's what spell check's for. Okay, let's go ahead now and look at direct labor. And we'll call this the demon master or direct materials. Okay, for my direct labor, I'm going to have my actual hours times my actual rate, which is what I actually spent. I'm going to compare that to my standard hours times my standard rate, or what I should have spent. Okay, the actual amount of hours that I used were 7,400 at a total price of 92.5. So what that means is that I must have spent $12.50 per hour. How did I get that number? I took 92,500 divided by 7,400 hours. That's my rate per hour. Okay, now how many should I have spent? Okay, so right over here, direct labor, 1.6 hours at $12 per hour. Okay, so right over here, you're going to have, so if I did 4,800 units at 1.6 direct labor hours per unit, this is going to give me 4,800 times 1.6, or 7,680. My rate per direct labor hour is $12 per hour. So right over here, this is going to be 92,160. Okay, now what's weird about this question is that I'm looking at this right over here now, is they're coming up with, oh, it's 1920 per hour. And again, I would leave it consistent with the hours that were actually worked. This is on a per unit basis, so just I would keep it like this. It's going to be easier for you to go through and analyze. So over here, I put in, so my total direct labor variance. Now, how did I do? Well, on an overall basis, I spent more than I should have by about 340 bucks. So the overall is going to be unfavorable. And let's wrap up. Perfect. Okay. So the overall is going to be unfavorable. So when I take my actual rate times my actual hours minus my standard hours times my standard rate, this is going to give me unfavorable total direct labor variance. Now, what's interesting about this one is I paid a little bit more per hour, 50 cents more per hour, but I used less hours, 7,400. So what I'm now going to go ahead and do is I'm going to go ahead and put in the middle value. Okay, so right over here. So my middle value is my actual hours times the standard rate. And this is going to give me 88,800. Okay, so what do I want to do when I'm going through and checking my work? Well, I have to go through and say, all right, my two components of my direct labor variance are, the first one's going to be my rate or price variance. Okay, so this is going to be AH times AR minus AH times SR. Again, I am leaving the hours constant. I'm focusing on the rate. So this is going to be an unfavorable variance of 3,700. When I compare that middle value to the standard, I'm isolating the rate, so I'm focusing on the hours. And here, this is going to be favorable. Why is it going to be favorable? Because I actually spent less hours than I had budgeted. So this is going to be a favorable direct labor efficiency, or what the book calls quantity variance. Okay, always got to check my work right over here. When I add up these two amounts, this has to equal up to the total. And if I didn't do it up here, let's go ahead and do that right now. So these two numbers here have to equal to the total variance. When I have the two ones that I've isolated, just make sure you go through and you're checking up on these. Okay. Now here's the reason why I had to redo this video. And I'm just not used to the way that the textbook sets things up. And when you look at what, and I'm going to do, so Becker CPA review has allowed me, I'm not sure what they'll do after this, but Becker CPA review has allowed me to preview some of their material, as well as Roger. And so when you see the overhead questions, it's not going to be as simple, especially if you're taking my test, it's not going to be as simple as what you're seeing over here, right? If you kind of look at the way that I'm going to kind of go through and test you, if you're in my class, is going to be closer to something that looks like this, where you're going to be given a production schedule. You're going to have to go through and figure out like a lot of different things. So as you're looking at me do this part of the question, if you're in my class, this is not going to be this pleasant. Okay, so let's just keep it like that. Okay, so for Wiley, how much did I actually go through and spend on what did I spend on my overhead? Well, as we know, overhead has two components, right? It's variable overhead and fixed overhead. Okay, so the variable overhead was 59.7, fixed overhead was 21,000. Okay, so the total amount I spent on my overhead was 80,700. Now, what's really messed up about this and why I do not like this is that this one, they did some kind of a funky conversion. They said, oh, here are the rates, but then you had to divide it by 1.6 because it's 1.6 per unit. And again, I just don't like it when I don't really, for me, it's like, I'm not going to take the time to figure out this part of it. So what we're going to do is we're going to say, oh, how many, if it says over here that the predetermined manufacturing overhead rate is $10 per direct labor hour, or 12 plus 4 is 16 divided by 1.6, what I'm then going to go through and do is say, okay, so so how many direct labor hours did I go through and work? Well, I had 4,800 units at 1.6 direct labor hours per unit. So the total number of direct labor hours that I had was 7680. Okay, I'm going to take this amount, I'm going to multiply it by my rate of 10, which is going to be my overhead rate per direct labor hour. Okay, this is going to be 76,800, or my budgeted. Okay, so over here, what I'm going to go ahead and do is I'm now going to say, okay, this is going to basically give me a rate of 3,900, and this is going to be unfavorable. I spent more than I should have. Okay, so I want to show you their solution just so we can kind of close the chapter, close the book, and move on with our lives. And if we kind of go over here and take a look at this, they're just doing the 7680 times 10, and you're done. So that's how they're going through and showing how they're going through and doing it. And again, if you're taking my class, you're not going to get off that easy, because that's not the way the CPA exam does it. Okay, so I want to thank Wiley for allowing me to be here with you today. Please don't forget to like and subscribe if you're looking for any other solutions from Wiley. I'm more than happy to ask them for permission for any, or I actually have their permission for anything that's financial, managerial, or intermediate related from these books. So in any event, don't forget to like and subscribe. If you'd like to see other solutions, please feel free to ask me for them in the comments, and have a great rest of your day. Have a good one.